Welcome back to Season 4 of NSE FinWiz, powered by CNBC TV18. We're at the Havells India office in Noida today, and our set of financial experts is carrying out a financial planning and wealth management workshop here for the employees. In this particular segment, we are going to be talking about insurance and how to choose the right insurance product. So, experts, first of all, there are a lot of insurance products out there. There's life insurance and all kinds of policies that one can go for. There's medical insurance. How does one really choose what insurance product one should have? And with respect to goals and insurance, how do you really club the two?
Okay. See, basically, there are only two types of insurance that you should have in your portfolio. Okay. One is the medical insurance. Okay. And have tons and tons of it if you can. Okay. Because as Harsh said, in fact, inflation is going to, the medical inflation is fairly high, and that cost of hospitalization is increasing day by day. So a good medical insurance, now even if you have a company provided one, please have a good medical insurance.
Okay, so let me get a show of hands here. How many of you have medical insurance?
Other than the company one. Fantastic,
Oh,
very good.
That's really good.
Okay, so you can create a combination where you pay only a low premium, take tax rebate under 80D, and get a high coverage. For example, myself, I have a cover of 25 lakh. I'm not young, I'm 44, family of 4, and I pay only 21,000 rupees premium. That's great. Second insurance is buying an online term insurance premium. Online term insurance premium helps you to get a good cover and pay a least amount of premium. The worst thing that you can do is buy any other investment related insurance product. It's like drinking and driving. They don't mix well. Okay. Now, when it comes to term insurance, typically this is advisable to people who have goals, liabilities. If you're married, you have got families, please by all means have it. Okay. And extend it till about 70, 75 now, because people tend to work for a longer term horizon. And people are marrying late. At times your responsibilities are not over even if when you retire. Okay. So it makes sense to do that.
You know, there are two very simple tests to find out whether an insurance policy is good or not. Okay, in any insurance policy where you hope to God that you are never going to get anything back, that is a great insurance policy. That's one. Okay, that's rule number one. Whenever in doubt, use this rule. Rule number two, which is not exactly 100%, is if somebody is pushing an insurance policy down your throat, okay, it's probably not a good policy at all. Because in a true insurance, the amount of commissions that anybody gets, insurance tends to be hugely missold.
Correct.
In India, right? And if nobody is making commissions, the online term insurance that Tanveer spoke about, or any policies that you buy directly from the insurance companies, there is nobody who's making any money. So it isn't going to be pushed down your throat, which means you have to go and do your medicals yourself. No agent is pushing you. Why is agent pushing you? Because he makes a commission. That's why so agents have a very vital role. It's not that they don't have a vital role. Unfortunately, the kind of policies that most of them sell are not probably good.
All right. So let me get an audience question in. This one is from Gaurav Taksali, Senior General Manager IT. He asks, what is the difference between private insurance and government-supported insurance, a plan like LIC or any other nationalized insurance? Which one should one go for?
Okay. I don't differentiate between government and private sector because they are all governed by IRDA regulations. Okay. And to qualify for insurance license, a very strict regulation is there. Secondly, when you're buying an online term insurance policy, look for two very important clauses, which is called a claim settlement ratio. Out of the claims given, how much they are settling. Second is your claim settlement time period. Okay, these two filters should be there. Now, very simple thumb rule when buying term insurance: please be honest and disclose everything, even if you have a problem, and get a medical test done. In the first 2 years of term insurance, there will be a lot of scrutiny. Okay, suicide is not covered also. But after 2 years, if God forbid something happens, no insurance company can ever reject your claim.
All right. Okay, so that brings us to the next question, which is from V.S. Gunjan, GM of Marketing here at Havells India. And he asks, how important is life cover of self and family, and how much to invest in insurance?
Insurance is an expenditure, right? Just like your car insurance is an expenditure, your life insurance has to be an expenditure, your medical insurance has to be an expenditure, critical illness has to be an expenditure. These are expenditure. This is not part of, it's part of the 80%, okay? Except the only difference is that this comes even before the first 20%. You first do insurance, then do investments. So I think insurance comes first, the 20% investment comes second, and after that spend if any money is left.
All right. So we're going to head into another short break at this point, but on the other side of the break, we're going to be answering all the questions that the employees of Havells India have here at their Noida headquarters. Stay with us on NSE FinWiz, only on CNBC TV 18. Welcome back to NSE FinWiz, powered by CNBC TV 18. We are at the Havells India headquarters in Noida. And in this final segment of our show today, our financial experts are going to be answering questions that the employees have here. So if any of you have questions for our set of experts, yes, we already have some hands up. Please wait for the mic to reach you.
This is regarding retirement plans. There are already some plans in the portfolio of an individual like me. So beyond those plans, you're recommending the equity-linked mutual funds as the best investment option. But if somebody has real estate as already as an investment option and various plans already fixed up, so are you saying that the remaining whatever money you want to put in for retirement plans is only exclusively for mutual fund, equity-linked mutual funds? Is that what you're recommending?
Okay, see, if you have real estate, you can't do much about it. You're owning it. The retirement plans, the insurance plan that you have, I would suggest that you get them evaluated with a good advisor, okay? Because there's no point chasing, if with that retirement plan, you will have to pay premium every year. There's no point good money chasing bad money, okay? So what has happened, you get this plan evaluated, and based on the evaluation, a good advisor will be able to tell you whether you should continue, or you should surrender, or you should get it paid up. There are three options. Whatever is best in that interest, and he should be giving you a rationale why he is saying this, okay? Post that, if you want to really work on the retirement plan, then equity mutual fund works well if your time horizon is more than 10 years. If it's less than 10 years and you're say 5 years away from retirement, then I would suggest a balanced fund to fund that requirement. So it's not the product in itself, it's where your goals, how long your goals is, so the product has to be suited to that particular goal.
My question is related to insurance. See, normally it tends to happen like the only earning member in a family is insured because the livelihood of all the other members are dependent on him. So in that case, so how relevant is this like insurance of wife or kids are there? Should we go for it or?
As long as it's term insurance, which nobody is going to actually market to you, right? A term insurance, even for a non-earning spouse, is fine, small. Okay, it is just to reimburse, it is to take care of the costs that invariably arise, the financial costs, because that's the only thing that can be insured. Emotional costs, social costs can't be insured, but the financial costs you can insure.
All right, thank you, gentlemen. That was a very insightful session, and thank you, audience at Havells India. It's been a pleasure interacting with all of you. With that, it's a wrap on this episode, powered by CNBC TV 18. Hope those insightful tips help you manage and grow your money better. Until next time, it's goodbye.
The experience of today's event was really good. We were just expecting just by the name that it's something to do with the investment and the equities and everything. So it's going to be like really financial and really technical. But the experts and all, they kept it very simple, to the point, and very knowledgeable.
The experience was very amazing, very out of the world actually. So I'll say I have learned very good things and I'm taking back few more clarities from this event.
Innovate. Enable.